Okay, so welcome back, guys. Good morning. I wanted to talk to you about one trade down for Asian session trading. So for Asian session trading, you know the key factors I'm looking at. I'm looking for minor buy side and minor sell side before the market open. So that's probably the range that was left by the market before it closed. So I'm having it as that right there, that high, this low, and I'm having minor sell sides right there. Okay, so I would consider this as my minor buy side because I'm not having any other high within this range. This is the only high I'm having, so that's what I'm considering as minor buy side. I have to mark that as minor buy side. And I would want to consider this as my minor sell side and this range low as sell side too. So if I'm to just mark it at that, to make things simpler for you, you can take the range before the market closed as your minor buy side and sell side. Okay, so I would want the market to take a move that takes out any of these and comes back into the new day opening up. We have a tiny new day opening up right there. This candle closure at 4:59 and this candle is open at 6 a.m. So there is a tiny gap, an overlap actually. That is the new day opening up for today's trading. Now a move that takes out minor buy side or sell side and comes back into the range, that is my initial buy side and sell side. So I'm having this low, a move that takes out this low and comes back into the new opening up will be my initial sell side. Now I have the market trading higher, taking out my buy side, then sponsor a move dropping lower, coming back into this. So this is my initial buy side for the day. That is my initial buy side for the day. And you might be inquiring, like asking what do I use this? This is, I can use this as a level for reference going through the day. So it continues to act as, I don't want to say support or resistance, but it works that way. Then I'm having this, the market drops lower, taking out this loss and then taps back into the day opening up. So this is my initial sell side for the day. Just like that. I didn't save this. Okay, so we have the market dropping lower, coming back into that, going into the 7 p.m. and this is where I start looking for entry. So 7 p.m. opens up, we rally below this low. So rallying below this low, this is the start of the move that takes out this low. So if I'm to measure from where that move starts from and going into that low, exactly I'm having the negative 0.25 of this low right there, which properly aligns with this low. So I'm expecting a measure of manipulation further below this 0.25 going into this low right there, and we'll have that right there, we tap that low right there. So now I'm building on this for a move going higher. So I'll consider, so the market opens up at 7, but prior to 7 p.m. I'm having a fair value gap right there. So for me to take buys, I would want the market to give me an inversion of that. I'm looking at that as reference, extend that into price. I want this to be an inversion fair value gap going for higher prices. Now we have this low, and this low can't be just tapped just like that. If we are to read it as sell side 2, then there is a certain measure of manipulation that the market will want to go to. So I have to get the negative 0.25 of that low. Let me plug this in. The negative 0.25 of this low, but where does the move start that takes out that low? I'm expecting now. This is just a tap. For me to consider a liquidity sweep, I want it to manipulate further below to the negative 0.5. Now, if I'm expecting this low to be taken out, I want the market to manipulate to a certain negative 0.5 level. So this high initiates a move that takes out this low. So measuring from that high right there to that low, extrapolated low and high, I only need the negative 0.25. Now I want to measure from that high. So that is the negative 0.25, that blue line of this low starting from that high. It gets nailed so beautifully just there. So the market taps that, and after that I'm satisfied that the market has accomplished all its goals for sell side, because I'm not considering this as sell side, because this was a move that came into a buy side inefficiency, sell side imbalance. So it came back into this BC and took out a low. So I didn't want the market to manipulate further into this. Then that means you are going in for sells. As the negative 0.25 taps right there. If you would have been mistaken and took this trade, that would be fine. Market manipulates lower to give you another entry chance to. So this would be fine. Your stop loss would have been right there, just like that, and you would have taken a slight stop loss. There is no if I was to also be in that trade, and most likely I would have been stopped out, I think, just like that. And then the market dropping lower, take out this low. If I didn't have noted this low, but if I noted it right there, then I would be fine. Now looking back into this price action, I'm having an inversion fair value gap. I want to solely look at after what happens after the market open. Now that is my inversion fair value gap. I'm having a market dropping lower after a low, and this is my optimal trade entry, the signature model. So just like that, toggling on the optimal trade entry, I'm having my levels just like that. I'm expecting the market to rally back above them, and then that retest would be my entry. Looking at this one, not to be taken out as my stop loss. So market rallies higher, closes above them, and we drop. So remember, in the Asian session trading, I'm looking most of the times at the volume imbalances that form. It's crucial in the Asian session trading. Now I'm having a volume imbalance right there and a volume imbalance right there. Now inside this range, we tap that, come into this volume imbalance. Market first fails to close below that, then rallies lower to fetch this one, and then the market starts running higher. After we come back into this inversion fair value gap, I know that my move has started. Even if we manage to drop below that, I would want these levels now to be respected to the tick. So I'm having the sweet spot right there. Market rallies back higher into this inversion. We inverse that, we go back above that one more time. Market drops into that low, and then we rally higher. Now what is my target for the Asian session trading? I told you I'm looking for a move that will give me a negative 1 standard deviation or a negative 1.5 standard deviation, but in between those two, half of that trend between the one and between the negative 1 and the negative 1.5 standard deviations is the most efficient take profit you can take. the market cannot leave you without filling your take profit. So if I'm to toggle that onto the market, measuring this range, because after this high, that's where I have the chain settled delivery from sell side delivery to buy side delivery. Okay, now measuring that, I'm having -1 and -1.5. So between this range, half of that is solely your perfect take profit. Come to measure quads just like that. Half of that range between the -1.5 and -1, if you had to use the fibs for take profits, then this would be your best exit right there. The market rallies higher into the upper quadrant of that range, and then what happens after that? We pull lower. So that is my take profit if I'm to denote it on the chart just like that. Take this off. My take profit is at 24,829.25 right there. I'm having a high at that and a fair value gap right there with volume imbalances. So the market rallies higher, we come above initial sell side, we have a fair value gap right here, plus this volume imbalance. I'm going to consider that as one. Now having consequent acknowledgement of that, market drops. Consequent acknowledgement of that, the market drops back into half of that fair value gap plus the volume imbalance right there. Then we rally higher. So we move into the new day opening gap. Then we drop, coming back below into this bullish fair value gap. The market rallies back higher above initial sell side, uses that as support, and then we'll rip into this high right there. I want you to digest that into your trading. I hadn't looked into that. So where does this move start from? The move that takes out this high, where does it start from? It is initiated by this candle. This candle initiates that move, and from that candle taking it into this high, having -0.25, hit that right there. Full take profit. Then the market drops. We use that, but I'm not interested in trading after it clocks 9 p.m. Before me getting an entry, I'm no longer looking for an entry. So that is it for Asian session trading. And another thing we are currently trading after the 12 to 12:30 opening range, 12 a.m. to 12:30 opening range. Having the high, this is 12, this is 12:30. Between that, those two lines, the highest high and the lowest low, which is that and that, quadrants on that have the market trading to consequent encroachment of that range. Now we drop using that low to push price lower. So we shall come back and look into what we will be doing for the New York session AM, or solely going into the lunch macro on the 2 p.m. So thank you for watching.